Hey everyone, welcome back to the channel. I'm Doug the Retirement Guy, and today we're doing a deep dive review of TSPY, TappAlpha's S&P 500 ETF. Now, I put on here why I believe I can retire on TSPY. Well, as you all know, I am already retired. I've been retired for well over 10 years already. But TSPY is just changing the market for so many people. And I wanted to make sure that everyone understood that this is a fund that just shows you the performance that it's capable of doing. How you could actually use this is in a retirement fund and a retirement core piece. Let's get into today's video.
Important investment disclaimer. This is for educational purpose only. This is not financial advice. Distribution risks. Distributions are not guaranteed. Yields are not guaranteed. They're always subject to change. So always be on top of your investments and always talk to a professional consultant before making any financial decisions. Same thing with tax purposes. So TappAlpha, the strategy that they use, that they came out with this probably mid 2024. And they came out with TSPY, which is TappAlpha's S&P 500 Growth and Daily Income ETF. The strategy that they use, the key concept is that they write zero call options that expire within 1 day. Okay. The next key that they use, it enables the rapid response to economic data releases. So they're able to change as the market changes, and they're able to change basically within a very short period of time as the market comes around, because they're only dealing with that 0 to 1 day expiration on their call options. So it provides a better upside potential than long-term contracts, because we know that covered calls will always hinder the upside effect of a fund, and it caps it. Well, these guys are able to find better ways to give you the upside potential versus that long-term contract side of it. So the flexibility of the rapid market responses with utilizing those zero DTE call allows the fund to avoid being locked into long-term contracts during critical after-hour movements, providing a significant advantage over week-long or month-long strategies. It utilizes daily options, so the fund is not linked into long contracts, and it's a unique approach aims to maximize time decay benefits while simultaneously reducing the overall time risk. So you've heard of people use zero DTE calls before. These guys just use it in a totally different fashion, and they're always on top of what's going on. So now let's take a look at the essentials of the TappAlpha TSPY, TappAlpha S&PY Growth and Daily Income ETF. The fund seeks current income while maintaining prospectus for capital appreciation. The fund's secondary investments, which is normally their bonds and treasury notes, their objective is to seek the exposure to performance of the SPDR S&P 500 trust. So when we take a look at some of the numbers that we have here, you got a share price about $25.65 at the time of viewing, about $192 million reported from TappAlpha, a distribution rate of about 14.20%. This gives us about 18.54% total return because of the growth of the fund. Management fees about 0.68%, and of course the 30-day SEC yield because of those treasury notes and bonds that they purchase at 0.43%. So the core advantages of all this is diversified. A high 14.2% yield is achieved through a unique zero-day option strategy that we talked about. The high income of writing those daily options maximizes the time decay benefits for higher yields, and the flexibility giving them the time, that's very short periods that they can adjust to marketplaces. It's kind of a unique strategy that they use. We see the zero DTE used a lot, but these guys are using it in a totally different way to try to generate more of that, again, income. When we take a look underneath the hood of this, now this fund came out August 14th of 2024. And you can see down below the stock track pricer. Other than April 2nd, they had that drop off, had a quick recovery and then dropped off again and then full recovery right back through. Even in the November drop off, it looks like they've done a very, very good job of managing a troubled period. We look at the holdings, they're heavily into that spider S&P 500 with over 269,000 shares. And then you see it's the America First Government Obligation Fund, where they call store their money at when they're not using it to purchase into the S&Ps. So as we said, this thing pays monthly, has its 4 separate little holdings, 7.49 million shares outstanding. Now, TSPY's performance, this dials it in just over the past year, just a little bit closer to it, and you can see that April drop off and the big recovery that it made. Come all the way up to really early November, they hit that $26 price point, which is right in line where they were previously to the April 2nd drop off. And now they've maintained this level across the board. We look at the performance, including growth and these are total returns with income and growth. 1 year, 19.87 and 18.44 cents inception. So you can see that they're just continuously doing this, the performance year in, year out. So 3.78% past year, 19.87% total return over the past 12 months. Now we get into the distribution side of it, and you'll see they have posted a 13.7% distribution, paying about $3.50 a share over 12 months. The distribution average is 29 cents per share. We look at the payouts for the virtually past little over 12 months, and you'll see everything comes right into that average pricing right around that 29 cents. And we see it slowly having a trend upward for a little bit of a growth. So income-wise, it's got the potential of consistency of payouts.
Now let's take a look at the TSPY's performance with total returns year to date so far. When we take a look at VOO, which is the S&P 500, and we take a look at TSPY, look at the performance between the two. They match almost identical to each other. The lines are so close. When one's going up, one's going up. The other one, when one goes down, the other one has a similar spike difference. Now, when we get all done to this, you look at VOO is up 21.22%, and TSPY is up 20.06%. They are actually capturing almost 98% of the movement of the S&P 500. And they're doing it in a little different way by doing it with income versus just overall growth of a fund. So the positive and what this means for long term is if the underlying assets are matching the ETF and the ETF is matching the underlying assets, you can almost follow this now without deep dives into it and find out that if the S&P 500 is going up 5, 10, 20% over the next year, you can expect TSPY to do very, very similar because their systems are operating very true to form. And if they're able to capture that 98%, that's a lot better than a lot of funds do with an underlying asset. So this is why these total returns mean everything. One's doing it by growth, one's doing it from income, but you're still capturing everything with it. So very pleased and very impressed with how TSPY's performance year to date and total returns are matching the S&P 500.
So now the retirement dream. Can I retire on TSPY? Can I have one fund to retire completely on? Well, if you had a cost of living of $5,000 a month, which is about $60,000 a year, which is very similar to what we find in a lot of our reports, you would need 17,242 shares to do it. At $25.63 a share, this investment would be $441,912 and of course 50 cents. And you'd be able to have income of $50,000 a month. Now, is this the exact way to do it? Is this the proper way to do it? No, but this is a hypothetical way of looking at it, saying you could actually retire on TSPY. But again, these are just hypothetical numbers, and this is just future forecasting. So investing with caution, though, limiting the historical performance data as a higher risk asset, TSPY lacks a track record in the crazy down markets. As I said, we're just over a year on this fund. So where I come back with this is investors should note that historical success occurs during positive market runs. So if we did run into a negative market, we would definitely see the thing, where's it going to go? How will it handle with those zero DT calls? Will it cut the yield down? Will it cut the growth down? How will that affect? We don't exactly know. And then sensitivity to market volatility. The fund's performance is heavily tied to the S&P 500 and applied volatility. In a year where the market drops significantly, TSPY's unique strategy may yield different results. And that's why I always say you can't go with past history. You can't go with, things will change from year to year. The forecasting of S&P 500 sounds good, but we'll wait and see what happens in 2026. But I just believe that this is a fund that can really change a lot of people's lives if they understand what's going on with TSPY. Let me know your thoughts on it. Do you think TSPY should be in your portfolio? Should it be everyone's portfolio? It's a nice fund that I like. I like how TappAlpha has done what they've done. They've introduced 2 new funds working exactly from this one. They have one from the NASDAQ 100, which we'll cover. And then they have 2 that are using some leverage to try to even give bigger returns and bigger growth to the funds. And we'll be covering those here shortly. They just came out, and I want to get some history behind it before we do a full presentation. Let me know your thoughts. I'd love to hear from you. Don't be afraid to hit that like button, hit that subscribe button, and hit that bell notification.